From being born and welcomed into the bankruptcy of his father during the Great Depression, selling candies and newspapers door to door, buying his first stock at the age of 11, and speculating on a plot of land flooded by the Mississippi River, to becoming the richest man in the world in 2008, being recognized as the greatest investor of all time, and heading an investment empire valued at over $767 billion. This is the story of Warren Buffett, as told by the One Percenters. Buffett was born on August 30th, 1930, in Omaha, Nebraska, and was the second of 3 children. His father, Howard Buffett, was a congressman and businessman, while his mother, Layla Buffett, was a homemaker. From a young age, Warren showed an exceptional interest in the world of business and finance. Young Buffett lived in poverty during the first 6 years of his life, prompting Warren to make the decision to become rich. But unlike other children his age, he took steps early on to achieve this purpose. From a very young age, he began to engage in business, and his initial ventures included selling chewing gum, sodas, and lemonade to earn some money. Due to his father's political ambitions, they had to move to Washington, an idea Warren didn't like. At the age of 11, he began delivering newspapers, earning up to $175 per month, which would be equivalent to $3,478 in 2023. Warren Buffett bought his first stocks at the age of 11 in 1941. They were 3 shares of Cities Service preferred at $38 each. Buffett had read about the company in the newspaper and believed it was undervalued. Buffett purchased the stocks with the money he had saved from his newspaper selling job. It turned out to be a successful investment, as the stocks doubled in value over the next 2 years. While the exact selling price is unknown, it is estimated to be between $50 and $60 per share. Buffett's profit was between $15 and $22 per share, representing a gain of 40% to 50% in 2 years. This was a highly successful investment for a 13-year-old. In 1945, Buffett invested $1,200 in 40 acres of farmland in Nebraska. The land was inexpensive because it had been flooded by the Mississippi River. Buffett believed that the river would eventually divert, causing the land's value to increase. His prediction was correct. The river did divert, and Buffett's land was valued at $2,200 in 1947. Buffett sold the land with a profit of $1,000. Before starting his college years, he ventured into a pinball machine business, beginning by placing the first one in a local barbershop. Shortly after, he had more than 7 machines in operation. With it, he earned around $50 per week, a situation that made him question whether he should attend college. At some point, he felt that his entrepreneurial vision was sufficient to start working full-time on it. Influenced by his father, he decided to enroll in the Wharton School in 1947. However, his stay at this school was brief because, in his view, the professors had nothing new to offer. He only spent 2 years before transferring to the University of Nebraska, where he graduated with a Bachelor of Science in Business Administration. He then entered Columbia Business School, where he earned a Master of Science in Economics in 1951 and received classes from his mentor, Benjamin Graham, the author of the book The Intelligent Investor. In the following years, he tried his luck in various jobs, first at his father's new brokerage firm, as a salesman rather than an analyst, which was his true passion, and later, he wanted to work in partnership with his mentor Graham, even offering to work for free. Initially rejected, Graham later called him to hire him at Graham-Newman Partnership, Benjamin Graham's private investment company. Here, he realized that despite both agreeing on value investing and investment doctrine, they differed greatly in the depth and dimension of investments. For this reason, Warren Buffett decided to resign after learning that Benjamin Graham was going to retire. After leaving Graham-Newman Corp. At the age of 26, Warren founded Buffett Associates. To do so, he used the capital contributed by family and friends, while he himself only contributed the symbolic amount of $100. His operational rules were simple. He did not allow partners to withdraw or inject new capital until December 31st, and he did not disclose where he invested. As he did not charge monthly fees, he earned income by taking 25% of profits when they exceeded 6% annually. The investment style he employed was the same as his mentor Graham's, the classic value investing, which invests in arbitrage situations and cigar butts. In Buffett's words, if you buy a stock at a low enough price, there is usually some bounce in the business price that will give you the opportunity to make a decent profit, even if the long-term performance of the business is terrible. I call this the cigar butt investment approach. A cigar butt found on the street with only one puff left may not offer much to smoke, but getting it for free will make that puff quite profitable. Over time, Buffett Associates grew from a small investment partnership with 7 partners to managing up to $7.2 million and having 99 partners by 1962. In 1962, Warren Buffett began acquiring shares of the textile company Berkshire Hathaway, and by 1965, he took control of the majority of the company. Initially maintaining the textile business from 1967 onward, he expanded the company into insurance and other investments, eventually phasing out the textile business and exponentially diversifying into various sectors. This marked the formation of a holding company through which he concentrated his investments since 1965. Buffett closed Buffett Associates and used Berkshire Hathaway as an investment vehicle. Alongside him was his loyal advisor and friend Charlie Munger. Together, they sought to acquire undervalued companies with significant future potential. They invested in American Express, Blue Chip Stamps, and See's Candy Shop. They also purchased shares of the Washington Post, the newspaper that Buffett had ironically delivered when he was young. Later, Buffett's investments shifted toward banks, insurance companies, and brands like Coca-Cola. Warren Buffett earned his fame primarily through his role at Berkshire Hathaway, where he achieved remarkable results. Between 1965 and 2009, he presented a gain of 21.4% in his shares, while the S&P 500's return during those years was 9.3%. He consistently outperformed the market for most years, with results unattainable for the majority of investors. During that period, Buffett's company's stock went from a book value of $9 to $84,467. In 1985, he sold the last of Berkshire Hathaway's textile factories. During the 1970s, the successful investor spent his time reading annual reports, business publications, and answering his phone. One person he engaged in lengthy conversations with was his friend and advisor Charlie Munger, who would later become the vice president of Berkshire, a person Buffett highly valued. By 1973, Buffett became even more interested in the media. His company, Berkshire, began acquiring shares of the Washington Post Company. In 1977, he indirectly purchased Buffalo Evening News for $32.5 million, and in 1979, he started acquiring shares of ABC. In 1986, Warren Buffett's personal fortune exceeded $1 billion, making him a billionaire at the age of 56. On the Black Monday of 1987, he lost $342 million in his personal fortune, but quickly recovered and became even richer. He began purchasing shares of Coca-Cola Company in 1988, eventually reaching 7% of the company for $1.02 billion, one of Berkshire's best investments. By 1994, his shares yielded $8.58 billion in dividends. Currently, Berkshire owns 9% of the company, and the value of its shares is over $21 billion. All these financial moves made him a very popular figure. His circle of friends included prominent politicians, movie stars, journalists, and entrepreneurs. He became known nationwide as the Oracle of Omaha due to his investment skills. Warren Buffett was criticized for not investing in technology companies. The reason was that Warren was not a fan of investing in overly complex products. However, his reputation would grow after the bursting of the dot-com bubble, which left thousands of investors bankrupt while he had nothing to regret. In 2002, he was named the best money manager of the 20th century, surpassing Peter Lynch and John Templeton. He welcomed the 21st century as one of the richest men globally and was recognized as the greatest investor in history. Later, prominent business figures like his friend Bill Gates joined his investment firm. In 2006, Buffett declared that up to 99% of his fortune would go to the Bill and Melinda Gates Foundation, all in the name of philanthropy. In 2009, he acquired the remaining 77% of the shares of the railroad company Burlington Northern Santa Fe for $44 billion, considered one of the most significant business deals in his career. During the following years, Buffett sold Procter & Gamble Company and Johnson & Johnson shares from his personal portfolio. He later replaced them with International Business Machine Corp., IBM, and the acquisition of Media General, the owner of 63 newspapers in the southeastern United States. In 2012, the Oracle of Omaha gave the world a scare when he was diagnosed with prostate cancer. Fortunately, in the same year, thanks to high-quality medical services, he successfully recovered from the illness. Although Buffett had historically been cautious about investing in technology companies, Berkshire Hathaway began acquiring shares in major tech companies such as Apple in 2016. Berkshire Hathaway purchased 9.81 million shares of Apple, valued at about $1 billion. Buffett continued to buy Apple shares in the following years. In the second quarter of 2023, Berkshire Hathaway held a stake of 164.3 million Apple shares, valued at around $32 billion. During the Black Swan event of 2020, Berkshire Hathaway made some adjustments to its portfolio, selling airline stocks, but also investing in sectors such as healthcare. As of now, Warren Buffett is 93 years old and ranks as the sixth richest person globally, with an estimated net worth of over $100 billion. He continues to serve as the CEO of Berkshire Hathaway, one of the most powerful conglomerates globally, with a vast investment portfolio. Berkshire Hathaway holds the record for having the most expensive shares in the market, each trading at over $530,000. The company has a market valuation of approximately $767 billion. Buffett has publicly stated on several occasions that he is actively searching for a successor. Many believed that his friend Charlie Munger could be that successor. However, sadly, Munger passed away on November 28, 2023. And thus concludes the remarkable story of Warren Buffett. From humble beginnings to becoming one of the richest men globally, Buffett has imparted invaluable lessons on investment and perseverance. His legacy inspires entrepreneurs and investors alike, reminding us that with patience and wisdom, any goal is attainable. Thank you for joining this journey, and remember, your own success story is yet to be written. If you enjoyed it, don't forget to like, subscribe, and share with a friend. Until next time.